Building up a credit score from scratch or trying to repair past financial missteps can feel like an absolute mountain to climb, but the financial industry frequently rolls out specialized tools designed to act as a safety harness for this exact journey. One such option hitting the market is the Bar Harbor Bank and Trust Max Cash secured card, a product issued in partnership with Elan Financial Services that targets the core pain points of credit building while attempting to inject a bit of fun back into the process through a customizable rewards program. Navigating the world of secured credit can be incredibly frustrating since most cards require you to hand over your own money just to borrow it back, usually offering absolutely nothing in return except a line on your credit report. This particular card tries to shift that narrative by blending the traditional structure of a secured credit line with a cashback system that mirrors what you would typically find on a standard unsecured rewards card. The basic mechanism here starts with a foundational step that requires the account holder to open a savings account that is pledged as security for the credit card account. This means your credit line is entirely dictated by the amount of your security deposit, creating a strict boundary where a minimum refundable security deposit of $300 is required to get things rolling, capping out at a maximum of $5,000. The financial institution holds onto this deposit to mitigate their risk, which serves as an excellent guardrail for anyone worried about overspending or digging themselves into a deeper financial hole, since you literally cannot spend more than the collateral you have provided. The biggest draw for this option, and where it really stands out from a lot of boring credit builders, is the 5% cashback reward tier. Card members can choose two distinct categories to earn 5% cash back on their first $2,000 in combined net purchases each calendar quarter, which is a pretty hefty return for a secured card. The available 5% categories cover a wide spectrum of regular living expenses, including television, internet, and streaming services, fast food, cell phone providers, department stores, home utilities, furniture stores, electronics stores, recreation, and entertainment. Beyond those top two categories, the card provides a secondary tier of 2% unlimited cash back on one everyday category of your choice, which can be selected from options like grocery stores and grocery deliveries, electric vehicle charging and gas stations and ground transportation, or restaurants and food delivery. Anything else that falls outside of these choices earns an unlimited 1% cash back on all other eligible purchases. This sounds fantastic on paper, but a massive detail to keep in mind is that card members must initially enroll into their chosen categories, or all net purchases will automatically default to earning no more than 1% cash back. It is also worth noting that grocery store, supermarket, gas station, and electric vehicle charging purchases made at wholesale clubs or discount stores and supercenters like Target and Walmart are explicitly excluded from the bonus tiers and will only earn 1%. This structure presents a unique opportunity to maximize returns on necessary bills like home utilities or cell phones, turning standard monthly drains on your wallet into tools that actively build cash rewards. Looking at the positive side of this financial arrangement, the absolute biggest pro is the combination of no annual membership fee and a robust rewards structure on a secured card, which is quite rare in the banking landscape. Usually, banks make you choose between building credit safely or earning rewards, but this card allows you to do both simultaneously without chipping away at your balance with an annual fee. The flexibility of choosing your own rewards categories means you can tailor the card to your exact spending habits, ensuring you actually hit those bonus thresholds. Additionally, features like zero fraud liability protect you against unauthorized transactions if the card is lost or stolen, and account alerts help keep an eye on transactions, providing peace of mind for anyone trying to practice better financial management. On the flip side, the cons are heavy and require strict attention. The most glaring drawback is the financial cost of carrying a balance, as the annual percentage rate for purchases and balance transfers sits at a whopping 28.49%. This rate varies with the market and is based on the prime rate, meaning it can shift over time. If you do not pay off your balance in full each month, that high interest rate will completely wipe out any cashback rewards you manage to accumulate. There is also an annual percentage rate for cash advances set at 29.49%, which also varies with the market. Furthermore, the fee structure can catch you off guard if you are not careful, featuring a balance transfer fee of either 5% of the amount of each transfer or a $5 minimum, whichever is greater. Cash advances carry similar penalties, costing either 5% of the advance or a $10 minimum depending on the type of advance, alongside a $10 overdraft protection fee and a 3% foreign transaction fee. Missing a payment deadline or having a payment bounce triggers penalty fees of up to $41 for late or returned payments, though thankfully there is no overlimit fee. To summarize this financial product, it serves as a highly functional, double-duty tool that effectively addresses the frustration of building credit by offering a pathway to a better score while providing a rare opportunity to earn significant cash back. However, using this tool successfully requires navigating serious risks. The 28.49% variable annual percentage rate for purchases means that carrying a balance is an incredibly dangerous financial move that can quickly lead to mounting debt. Additionally, late payments or going over the credit limit can severely damage your credit history, which completely defeats the purpose of opening a secured card in the first place. For individuals who possess the discipline to pay their entire balance by the due date every single month to completely avoid interest charges, this card offers a highly rewarding path forward, but anyone prone to carrying a balance should step very carefully.